The coronavirus caseload continues to rise across the United States, and as states tighten measures and kind of pull back some of their openings, a second surge in certain areas of the stock market might emerge. And Mike Reeves watches it all. He knows. He's Mike Reeves of Strategic Wealth Designers, joining us to talk about the landscape of investing right now. Mike, good morning to you. Good to see you.
Yeah, good to see you.
Absolutely. This is always so fascinating to me to kind of watch how things are, moving along and being affected by what is happening. Let's talk about these stay-at-home stocks like Zoom, Peloton, and Netflix. What are you seeing, even Amazon, surging right now?
Yeah, I mean, it's natural to see these types of stocks, bounce when you're hearing some bad news about restrictions and shutting down. However, we do see evidence that the rotation is continuing into those value names. I mean, just the other day, the Dow's hitting all-time highs, the S&P 500, and the NASDAQ has not joined them yet. If those things continue to bounce, sure, the NASDAQ will be right back up there. It's just a lot of good news here in the short term as far as vaccines and treatments, and the market likes to price in those things that are going to happen 6 to 9 months out, not necessarily what's happening on a daily basis.
Yeah, as reality sets in here with cases skyrocketing and a vaccine likely, months away from at least everybody getting it, the interim still looks really bumpy. Could we see another downturn like we saw in early March for the stock market? I mean, are you expecting that? Is that what you're thinking is going to happen, or what?
Well, a drop in the market can happen at any time. Short-term bets, very difficult to make here. Those new restrictions, if they continue to get worse or more shutdowns, they continue to get worse. It could be tough. And the other thing here is they can't agree on any stimulus.
No.
And small businesses, unemployment here, if it rises because some of the shutdowns, things could get very bumpy. And then keep in mind, people aren't thinking about things like the moratorium on some evictions ending at the end of the year. So if things, if there's not a little bit of problems executing on the vaccines or the treatments, no stimulus, we certainly could have a bumpy ride for a while. A lot of good news is priced in right now.
Yeah, and I think that it seems like the market would maybe have another significant rise once the virus is behind us. But how do you, navigate the uncertainty of when that might happen, so investors don't miss out on the upside, but also don't endure a big stretch of the potential downturn?
During this time, or really any other, successful investing equals sticking with the fundamentals. The day trading and swing trading, it's exciting, but over a long period of time, the numbers don't support really making money in those strategies. You want to use rules like the rule of 100, and that's a simple rule. You take your age, say you're 60 years old, as a percentage. That's the amount of assets that should be in safe investments. And then you take that 100 minus your age, say that's 40%. That's the amount of assets that can be at risk. And the reason that's so important, if we do, have a fallback, the market comes down, and you have to withdraw money, it's the key to a withdrawal strategy. So stick with the fundamentals. It's exciting to, kind of do some short-term trading, but over the longer term, you certainly don't make money if you look at the statistics.
Yeah. All right, Mike. Hey, thank you so much. We appreciate it. Strategic Wealth Designers. We'll see you soon. We appreciate it. 6:25 your time right now.